If you're selling shares or investments, your tax rate will have gone up. So something known as capital gains tax has gone up. Over recent years, they've cut a lot of the allowances so more people pay this capital gains tax. It quite often gets a bit of a bad rap in the press for being, tax avoiders, sort of favourite thing. It's not quite that in reality. For most people, it's when they're selling some shares. Maybe they're selling a residential property they've got that isn't their home, or they're selling some commercial property, something like that. You'll end up with a capital gains tax bill to pay. And the rates have now been changed. So they were sort of 10 and 18%, except for residential property. Residential property was 18 and 24%, depending on how much other income you've got. So when you went over about £50,000, you'd start paying that higher percentage on the bit that goes over the £50,000. So, and what they've done is they've aligned the normal rates, this 10 and 18%, with the 18 and 24. So now it's just flat 18 or 24% capital gains. So if you are selling stuff, it is going to cost you extra money. And unfortunately, there's nothing you could do about it. They announced it and they made it happen the next day. So it's just to be aware, if you've been factoring that into your deal, that that's happening. Now, if you could get access to something called business asset disposal relief, if you were, say, selling your business, that's still available, and it's still available to April at a fairly cheap rate. After April 25, it starts to go up to 14 and 18%. So it's still cheaper if that's available to you, but if you're selling other things that aren't, unfortunately, it's just bad news.